With rising inventory, and that's what we're seeing right now. And I may go down a bit of a rabbit's hole on here. There's inventory you see on the market. Then there's actually what I call phantom inventory that you're not seeing right now, which are the unsold units by builders. And that's not captured in the numbers that you see that are published by the Toronto Real Estate Board, because those aren't properties that are necessarily on the market. You have a significant amount of inventory and you're like, what should I do? And I'm going to give an example of a client that I'm working with right now. They have a smaller property and they're looking to move up to a bigger property. And if they were to sell the smaller property now, they will take a loss from what they paid for it. And they've they've gotten over that hump, and they realize that, well, I'm going to take a loss here. I'm going to get that back in the next property I buy because I'm going to get a discount on that. So they're trading condo to condo, just to give reference to that fact. So going from a 1 bedroom to a 2 bedroom unit. If I have one asset that's depreciating value and another asset that's depreciating value, and I just make a shift over, the loss cancels itself out because both properties have gone down in value. And in essence, when that property goes up in value, the gains are going to work themselves out and you get a better property over that period of time for your needs at that time. So with rising inventory and looking at it and looking where things could be going, it could be an advantageous situation, even though selling that property now, and they may even get a bigger discount on the property in the future for the one they're looking to upgrade to. So it's just looking at how can I strategically use rising inventory levels to my advantage. Now, again, that all being said, I predict that when we hit a 3.5% variable interest rate, again, that's when an investor can get a 3.5 variable interest rate, you're going to see a shift in the market. Investors will be looking at it going, hey, my property isn't losing money anymore. It isn't a cash flow positive situation. I don't need to sell my property. You'll have investors start purchasing properties again because it's in a favorable position. At that time, you're going to see a shift in inventory and you're going to see inventory levels start to go down. When that happens, don't know. It's a moving target with where the Bank of Canada interest rate will be. But at 3.5% variable rate, you'd need to go down probably 3 more drops to get to that level. So we're probably looking at potentially the end of this year to get to that level of 3.5% interest. Just again, to give you that perspective when you may see a shift in inventory levels.